About recordings. Hey, it looks like we're live. I'm Chris Harder with eXp Realty and Homes by Chris Harder. And today I have the pleasure of having Erin Trescott with Guild Mortgage to discuss some things on, that side of the transaction. But first of all, Erin, it is the season. So do you have all your shopping and baking or cooking done, or?
A little bit of all of it. I don't know. Happy holidays. Thanks for having me on, Chris. I just did Christmas cookies with the family, and that usually becomes a very messy procedure, but a lot of fun. And we eat a lot of cookies during that night. And then, almost done with the Christmas shopping. So we'll see how it goes. So now I'm just ready to hibernate and watch some Christmas movies.
Absolutely. Fire up that Hallmark channel or bring out Elf and the Santa Claus, right?
Yes. The Santa Claus movies are one of my favorites with Tim Allen.
Oh, yeah. He's great.
Yeah.
Well, I've known Erin quite a while, and we just hit it off, and she always has so much great information. And so I'm really pleased to have you on here taking some time out of your day. And one of the reasons I wanted to bring you on is because I have buyers and sellers both just kind of pulling out of the market and saying, the interest rates scare me. I don't want to pay that high of an interest rate. Maybe we're just going to play this out, wait it out, see if it goes down. And just they're really unsure in this market. And I just keep thinking, yes, but this is a great time to be in here, right? Because you're not going against 35 people and you have to get there in 15 minutes and you have to overpay by, $30,000. So maybe you can talk about kind of what the current rate is and some ways, some strategies that they can get into a property now and feel good about it.
Yeah, Chris. So I have been in this business. So some of your clients and people that don't know me, I've been in the business 20 years. I started when I was 2. No, I'm just kidding. But love what I do, love helping people get into homes. But it's kind of a cycle. Doing this for 20 years, I've been through a few of these at this point. When I started in the business in 2002 is when I went into mortgage. I was doing 11%. So, it's always kind of been a different market. You're changing, going down. We had another recession in 2007, 2008. So, it is still a great time to buy, just like you said, Chris. Interest rates are falling depending on the program. They're falling in the, 6.5% to 7% right now. We've had some good days in the market where the rates seem to be coming back down. The Fed rate doesn't directly impact the mortgage rates, and that's what everybody focuses on, those Fed rates and changing those. So it doesn't exactly go with that. What the Fed rate does is just they want to help decrease and, slow down spending a little bit. And what that's going to affect more is more the credit cards and the auto loans and those type of things. So the mortgage rates are a little bit more trended on the 10-year treasury, which is more of a longer term investment. And so sometimes when you see those Fed rates jump up, you actually see the rates come down a little bit as well. So like you said, it's a great time to buy. A recession is normal. And we go through these cycles. I was just looking at some charts and showing that like about every 5 years, we go through some type of cycle with it. And we'll come out of this, they foresee the recession has already kind of started, and they see within the year it will rebound and things like that. So, I've heard this phrase from a lot of realtor partners and professionals in the industry that, find the perfect house and marry the house, but date the rate. So, you can get into a great loan program. Yes, it may be 6 or 7. It's not the 2s and 3s anymore, but you really can still get into a nice house. Like you said, you're not competing with 30 other offers right now, and that's your expertise. And so I think it's a great time to buy and get into those new homes.
Yeah, I think people are a little misled because we had 2 really great years of very low, historically low, maybe never going to happen again rates. And so they're just comparing to that, but they really need to look at the trends, like you said, in 5-year cycles or even the last 10 years. I think the average rate over the last 10 years is maybe 7.2. So really, we're getting at a very good rate. And they don't seem to be scoffing at paying credit card rates of 23%, right? So,
Yes, exactly.
so what are some things they can do to, lower this rate if maybe only temporarily?
Yeah. So, just taking in your financial goals. So say, okay, are we going to be in this house, just 2 years, 5 years? Are we retiring in this home? So taking a look at that picture is always a great idea because you can be like, okay, there might be other options for mortgage loans if it is a shorter term goal for them. So some people right now are looking at even some what we call ARM products, which is adjustable rate mortgages, where that loan is fixed for 5, 7, 10 years, and then it can change. So if your goal is to, hey, we're planning on retiring in 4 years, we just want to, we're going to run down to Florida and live on the beach and be nomads. Maybe that type of program is a good one for them because the interest can be a little bit lower, knowing that they're in a shorter term financial goal. And so those are some of the options that you can do right now. Just finding your lender for life, your mortgage lender, is a great option because you can just talk to them about different programs that are out there to suit your needs. So something I do with my clients is always just sit down and say, okay, I'm not going to, here's that conventional loan, here's the interest rate. Okay, bye, see ya. You want to go over the financial picture. What kind of time frame are you looking at? And what do you see this house being to you? Because it is an investment. It's something you do a couple times in your lifetime. And so to be able to offer different programs to meet the financial needs versus just right now, rates are high, so I want to run away, looking at the whole financial picture. So some of the lenders are doing what we call buy downs, where you can buy down the interest rate. And what that means is basically you pay some extra money and you get your interest rate lowered for, say, the first year. And then the next year it jumps up a point, things like that. So if you have a shorter term or, you're like, okay, in 2 years, I know I'm going to refinance or I know that I'm going to get out of this house, that's a great opportunity as well. And something I do with a lot of clients is look at the break-even points. Is it worth it to buy it down? Is it not worth it to buy it down? So with that, sometimes it's not worth it. Sometimes it's like, okay, I can handle 6.5%, and then if the market turns or my financial plans change, we'll look at it at that point. So I look at all the different stuff.
Oh, sorry.
It's okay.
Yeah, one strategy we're kind of thinking about is as if I have the buyer going to the seller and asking them to pay up to 2%, of the mortgage rate to help them buy down their interest rate and the prepaids. And sometimes that costs them less money than doing all these reductions. This is a market now where you say price improvement, new price, all the ways to say that we have lowered our asking price. And instead of lowering the asking price $10,000, maybe they could just pay $3,000, towards closing costs. So it saves them, but it also helps the buyer not have to bring all of the money plus pay for the buy down,
Exactly. And that's where, if you are a seller looking to get into something, just like you said, it might be more affordable to help the buyer, lock into a lower interest rate, do a buy down, even do a permanent buy down. Sometimes you can just pay a discount point and get that interest rate down for you. And so those are some great options as a seller too to look at because just like you said, typically they're going to be like, oh, let's cut the price by $5,000. Well, why not take that investment, into the buyer and help them get into the home too?
Can sellers lock in a rate?
So we do have a program at Guild Mortgage. There's different criteria that they have to meet, but a seller can look into locking and selling is what we call it. So lock in the interest rate, and that they can advertise to that buyer the certain interest rate that they have locked in. And how that kind of works is they say, okay, hey, on this market day, here's where that rate is for this type of program. And so it specializes the program a little bit, but it's still an option out there. And then buyers actually have an option to float down if the rates got better. So that costs a little bit of money for the seller to do, but it's another creative way of like, hey, let me help you get into my home, things like that. So it is out there to utilize.
So what is people ask, 3-2-1 buyout?
Yes. So Guild Mortgage, 3-2-1 buy down. So Guild has this awesome program.
Sorry.
Yeah, that's okay. And so it's a nice, great advertisement, but it's basically you can get into the home with as little as 3% down, which is awesome. And then the 2 is after you close, Guild Mortgage actually sends you a $2,000 Home Depot gift card. And then it buys down the interest rate, the 1% for you. So it's a great opportunity to look at that. I've also been looking at that with my clients to see, okay, is this a great rate right now? And what's your long-term goal? Or what are those typical conventional rates? So we look at all the options to make sure they're getting in there. But that's a great new program that we have. It does offer grants as well, depending on your income, to help with, buy points or down payment, closing costs, things like that. So it's a pretty awesome program.
So maybe we just go to the basic, like what does it mean to buy a point? Just run through what that means for interest rates and points.
Yes. So when people talk about points or discount points, buying points, a point is 1% of whatever you're borrowing. So you're buying a $300,000 house. You're doing the loan amount for $250,000. So 1 point equates to $2,500. And that's extra closing costs because you'll have your typical closing costs that includes the appraisal, title, setting up your escrow. But this would be additional. And those are the discount points. Now, the discount points isn't a 1-to-1 ratio. So if today's market says it's 7%, by paying $2,500, it's not going to get you to 6%. So it's not a 1-for-1 ratio, but sometimes it is beneficial. So it just really depends on where the pricing is. So we look at our pricing every single day. So rates can change every single day, sometimes 2 or 3 times a day in some of those crazy markets. And what we do is kind of evaluate. So sometimes 1 point can get you maybe 0.5% better on an interest rate. Something I do with clients too, to educate them and say, okay, where's the break even? At some point, is it going to be, so if you're paying $2,500 in 32 months, it's your break even point. Are you going to stay there longer than that? Yes, then it's a great opportunity to do that. So along with that, if a seller is willing to help pay a point, that's not money out of the buyer's pocket, which is so nice. And then, they're getting that break even at day 1 and saving some money that way. So again, that seller can keep their price up, but then maybe pay a point down to get them to something like that. But again, it's not usually a 1-to-1 ratio, but that's kind of how those points work.
Well, that's good to know. Okay, can you do that for any type of loan? The FHA, the VA, the conventional, USDA, or
you can usually do the permanent buy down. So like I'm going to pay a point to reduce my interest rate for the long term. So you can do those. Or there's specialty programs that buy down the interest rate for a certain period of time. So like that, one of our buy downs, it buys down the interest rate for the first year, then it jumps up 1% the second year, and then it gets to its original rate the third year. So there's a couple different options out there for that. So either there's a permanent or like kind of like we call it a temporary buy down.
Do you see many instances where there's an assumable loan on a house for sale? Or what's the situation with that?
Yeah, in my line of work in the last 20 years, I haven't really dealt with it except at a closing table that says, hey, this loan's assumable. But basically it's coming back because what an assumable loan is basically you find the perfect house and that seller has a loan that is $100,000 at 2%. Okay. And then you're buying the house for 200,000. So there's an opportunity you could assume that loan for 100,000 at that 2% interest rate. You do have to qualify and make sure that you can support that loan, and you go with their lender. So whoever the lender is, that's who's servicing it. That's who would get it done. The caveat to that is that you need to have the difference in the money. So you're buying a house for 200,000. The seller has the loan for 100,000. You have to make sure that you have the cash for the difference of the 100,000. And so it's out there, it's available. It's just like getting any other type of loan, but you have to go through whoever's servicing that loan for you at the time.
So one, you might be with somebody you don't know or trust, or, just because you haven't gained that. And two, you might need a bigger chunk of money to come just to, again, it's on what is your long-term goal and how long will we be in the house, and is that really worth it?
Yeah, and that's a thing. So I've had a few opportunities to talk about assuming the loan, and again, going over the whole financial picture, which you and I both do with our clients, and seeing, okay, is it really worth it? Yes, that 2% sounds amazing, but is it really that different? When you're looking at these longer term commitments of the 15, 20, 30 years, sometimes it's not going to be the best interest for you.
Well, I know that kind of not really switching gears, but I want to talk a little bit about you and your new company. And I mean, even though you've been in the business for many, many years, you've kind of switched from the financial industry over to, the mortgage. You were a lender, but now you're a mortgage officer. What is your title there? And tell
I
me
think
all about sales.
Yeah, I think I'm the same title.
Okay.
Except they put a senior on it because I've been doing it too long. But, again, doing it 20 years, I have always been with a bank. So a bank offers the whole gamut of products, the checking, the savings account, the mortgages. With Guild Mortgage, they are just focused on mortgage. So they're a mortgage company. And so as a loan officer, that's all that this company focuses on, which I'm super excited about because, and to let all of our viewers know, I just joined about 2 weeks ago. So I'm really getting to know the products, the people, everything out there. But being able to focus just on residential mortgages is key. They have fine-tuned it. They've been in business over 60 years. They're a nationwide company, a publicly traded company, and they just know how to make it efficient, effective, make sure the clients are taken care of. And we consider ourselves the lenders for life. We service 92% of our loans, so we'll keep most of them. Again, like, bond programs, some of those first time home buyer programs, those go to those servicing lenders, but 92% stay here with us, which is pretty awesome. So they are a JD Power top lender as well, which is pretty awesome. So they know how to do it, and they know how to help their clients and be very efficient and effective at it. And a great way to stay in front of my customers. So my clients, I consider myself their lender for life. And I get a lot of my referral business from past clients. I love working with them, love helping them. Buying a home is a very emotional process, and you become friends, as you know, Chris, you become friends with your clients. And the greatest compliment you can receive is a referral, family, and friends. And so when I can stay in front of my clients, by just dropping an email of useful information, things like that, and staying in touch with them consistently, it really does just kind of make me their professional in that realm. And so that's what Guild focuses on, is really just making sure that you have a whole financial picture built, because your home is your biggest investment. So I'm pretty excited about it.
Absolutely. So I'm just going to clarify. So you do not do commercial. You
I
do
don't.
strictly, okay,
Yep.
residential. Are you
Just
50,
residential.
all 50 states? Or?
I mainly focus in Iowa and Nebraska, but say we have a client that's moving to Florida. I have those connections. We have locations in all 50 states. And so I can connect them. I can still be their point of contact, but connect them with a local person down there too, which is pretty awesome.
I think that's amazing. And that's same with me, with being with EXP. I mean, we're in 50 states and I don't know what we're up to now, 20 countries. So if you want to buy something in, I don't know, France, I've got an agent for you. If you want to go to Canada, I have thousands of agents, no matter where you want to go, which is nice because if you're familiar with kind of the agent, the company, the forms, how you do things, speaking more to, Guild, it's nice you can just pass them off, have all that information, and they're not starting over, right?
Yes. And it can be a lot easier to close a new home. So say you're moving, from Arizona, but you're not going to be quite up here yet. You can have a local contact down in Arizona and a local contact for where you're moving, which is really nice to have that as well.
It is, because we just went through that, didn't we, a little while ago with someone coming from Arizona, but it was a little tricky, but Erin got it done. She made it happen.
Yes. So having just local professionals all throughout the United States was just key. The organization I was at previous, great organization. But this one it specializes in residential mortgages, and it goes out to all 50 states, which is pretty cool. So, and we also do offer bridge loans and home equity loans. So anything home related. And for some of you guys that don't know what a bridge loan is, a bridge loan sometimes helps get that gap of selling your current home and buying your new home and pulling the equity out to be able to buy that next home before you sell. So we offer some of those programs as well.
Yeah, because that is happening probably, well, if it stays like this, might be happening more right now because it is taking a little bit longer to sell certain homes. And if they're relocating or have decided to build the house and now that house is ready, you're kind of in a pickle unless you can do something like that.
Yeah, exactly. So we just offer the gamut of programs, and something that I like to do is just, even if it's not face-to-face, over the phone, over email, whatever works best for you, just go over a financial plan. It's not all about here's the interest rate, here's the program, things like that. There's so many myths out there that it's just so nice to get in front of professionals like you and I to just myth bust and to say, okay, we can do this. We can buy a house, and just go over the numbers and go over their financial goals versus just, hey, here's the rate, here's the program.
Absolutely. Well, yes, you're very personable. And if anyone wants to reach out to Erin, you can reach her at 402-981-2011. I should know this by heart, but you don't have to memorize phone numbers anymore. So it's 402-981-2011. Now I want to talk just a second because we had talked offline about what you can do with agents. As far as marketing.
Yes. So we can do some co-branding. So just, different pieces of advertising, social media, things like that. We can do some co-branding where we're helping get information out to your clients, which is really great. We also offer this program called HomeBot, which some of your clients may know what it is, but basically you can stay in front of your client base and send them out an email that has both of our information on it, but it tells them what's going on in the market. What's my home value? Is it worth maybe pulling some equity out to pay off some other debt? And so it's just a great way to stay in touch with your clients and keep that connection together between your professional realtor and your professional lender.
Yeah, because it definitely is a partnership, and the more relationships you have, and the better relationship you have. Erin is one of my main go-tos. Erin, I just got this question. I'm going to ask the expert. I'm not going to give misinformation. So it's nice to build that personal, relationship so that you can reach out, and she's going to answer me and answer the phone or text me back and give me correct information.
Yeah, exactly. And that's what, I love the relationship like you and I have, Chris, because I want to be a tool for you, and I'm always going through with my clients that, hey, here's a professional on the real estate side. I'll look at the numbers for you, and just being a team and having the tools to make it work for our clients, which is great.
That's a win-win, because then we service the client, and that's always what our goal is. So,
Yeah, for sure.
well, I haven't got any questions, but I did get some comments, great information. So I think we have touched on some good things, and I know there's always questions out there. One last thing, since you have been around not too long, but long, everyone says, well, is the market going to crash? And I think probably people are kind of getting over that and seeing that, it's not going to crash. The best time to buy real estate is the day you're born, right? I mean, it's just always going to be an investment. It's always something good to do because it's a great asset. And
yeah, that's exactly right, Chris. So yes, we may be going through a recession, but we've done it before. We've done it many, many times before. And it's just kind of the market almost like resetting. And with this one, a lot of people are going back to, oh, it's going to be 2007, 2008 again. Well, it's not, which is great because, in that 2007, 2008 market, people were pulling cash out up to 120% of their equity, and paying off those credit cards and then doing it again, and they were losing jobs and not having to verify their income that they could support the mortgage, things like that, where those things just don't exist anymore. So with lending after that 2008, 2009, lenders really just pulled back almost to an extreme the other direction. And then they've kind of come back to the middle pendulum. So you're still verifying all your information. You're making sure, you're working with a good lender partner that's making sure you can afford the home in the short term and in the long term. So, it really is not going to turn out like those 2007, 2008 times. And, there's still inventory out there. There was low inventory there, but inventory is coming back. The home prices, which you may know a little bit better, but they have gone up, but they're not still going up. They're kind of stabilizing at this point. So I think, we're really in a different type of position than we were back then, but still going through that cycle, and it'll come back around.
Can you tell me, I know you can't really talk specific rate things, but can you tell me what it takes for a first-time home buyer, what like their credit score needs to be or conventional to get the best rates?
Yeah. So the higher your credit score, usually you can get a better rate on, say, the conventional loans. There are other products out there, though. So there is a great FHA loan. USDA has a great product in some of those smaller towns. So anything outside the Council Bluffs, Omaha Metro usually qualifies. A lot of these have income qualifications, so you can't be above certain income levels. But I mean, your scores could be as low as 620 for some of those, even lower for some things if you have what we call compensating factors. Say you have a lot of money in reserves. You just went through a bad hiccup with your credit and you're still rebuilding. So if you have some of those other compensating factors, you can get even below a 620 sometimes with some of these programs. Now, say conventional rates are definitely driven by credit score. So the higher the score, the better, and that 740 is that excellent credit score and above for you. As lenders, we look at all 3 credit agencies. So a lot of people are like, well, my Credit Karma says this. Well, it looks at a different little algorithm, so to speak. So I tell people, with Credit Karma, just make sure you're looking at things that may come up that you may need to take care of. But those scores are definitely going to be different than when you go to your mortgage expert. And so, with that, just always checking to make sure like a collection didn't pop up or somebody's pulling your credit when you don't know it. That's what that Credit Karma is for sure. But yeah, again, the better the interest rate on a conventional loan, the better scores and all that good stuff. So yeah. Does
All
that
the more
answer
reason
that?
to you to find out what that is and to reach out to me so I can help you find the home of your dreams, right?
Yes. And, another great thing about Guild too is if that credit score is not quite there, we have great resources to help you get it there. So we have scenario builders that we can say, okay, hey, if you paid this off or if you did this for 3 months, it could get your score up to this possibly. It's always that maybe if.
Sure.
But it's a great indicator of like, okay, let's get this done. So if you have somebody that doesn't have the credit to do it now, we can put them in a program that, hey, in 4 months, we're going to get you into that house. And so we have that available as well.
Well, that's great because some people don't even know where to start. So
Yes.
I would say start by calling Erin at 402-981-2011.
And make sure
Honestly,
you
I mean,
call
if you're
Chris
not
too.
ready now, if you are not ready now, but you think you might be in the future, I mean, and if you're renting, this is what I tell people, you're renting, this is a great time to start putting things together because as the new year turns, more inventory is going to come on the market, then you're going to be in a better place than waiting till January and February and trying to get your ducks in a row. And then that just puts you back that much further because we know one thing is for sure, rents are not going down. So you might as well lock into a mortgage and control your, payment.
Exactly. And pay yourself versus your landlord because you are
Still
still building
very
equity in that home. Yep.
Absolutely. Well, again, thank you so much for taking time out of your day. I know you're busy building that business, and I really appreciate the time and can't wait until we can work together again.
That sounds awesome, Chris. Well, happy holidays.
Happy
And if
holidays.
you guys need anything, I'm always here for you.
That sounds great. Well, we will talk soon. Thanks
All
again.
right. Bye.
Bye.